My name is Ian Walsh, and this is The Moment Money Matters, joined day two with Ken Wellar, co-owner with Corey Lomberger at Rittenhouse Realty Advisors and Rittenhouse Capital Advisors. So Ken, thanks for coming on again. I appreciate it.
Thank you.
We had talked about kind of getting into the world of commercial and multifamily projects that are a lot of times, as you said, a niche and out of the limits for what most people do. What I want to talk about today are some buzzwords that people typically hear when they're in that marketplace. We don't really know what's on the fringe, but this is something you deal with day in, day out, which is, can you explain what a cap rate is, and if I'm a buyer looking for a stabilized property perhaps, what are my eyes focused on? What am I attracted to, and what are people looking at? So I know a cap rate's very important, but then stabilized properties, what am I also looking for in those?
Sure. So basically what a cap rate is you're basically looking at an income producing property, which basically you take your income and then you subtract your expenses and you come up with a net operating income, which will be your net profit after paying your expenses for the property. You basically divide your NOI divided by your purchase price will basically get you your cap rate. So when you look at kind of a stabilized deal, you're kind of talking about Philadelphia, and you're looking anywhere from Center City to Fishtown to Northern Liberties. We've been selling a lot of stabilized apartment buildings, anywhere from a 10 unit to a 200 unit ground up new construction property. And depending on the location and if there's a little bit of upside, we're seeing cap rates trade from anywhere from I would say 5 to 6 cap range is a good indicator where we're seeing cap rates trade right now for kind of stabilized property.
Stabilized, okay.
Yeah, so we're seeing a lot of, right now there's a huge boom going on in Philadelphia with apartment buildings. So we're seeing a ton of projects pop up all over the city. So I mean, we're selling anywhere from a brand new 8-unit apartment building with some retail on the first floor to, we're working on right now a 200 unit kind of ground up apartment building.
Wow.
So that's more kind of like your institutional deal to, I would say, your $2 to $5 million deal. We're dealing with a lot of kind of high net worth individuals that want to kind of get into the real estate game. We're seeing a lot of new players into the real estate game, seeing some doctors, lawyers, kind of want to diversify into real estate. And I would say a stabilized asset, like I would call it a turnkey operation, where you're basically buying an apartment building that's already up and running, you have leases already in place, and then you're just really putting on permanent debt and you're living off the kind of cash on cash investment. So on a typical financing in an apartment building, you're typically getting anywhere from financing as high as 80% loan to value to kind of in the 70%. It's kind of, I would say 75% is really kind of the bread and butter you should be able to get your leverage on. So you're typically going to need about 25% down. So if you're buying a $10 million apartment building, you're going to want to have about $2.5 million down as equity to put down on the property. And then you're typically going to finance these deals either through agency debt, Freddie, Fannie, you can do life insurance, CMBS loans, as well as there's a lot of regional banks. We deal with a lot of New York banks, North Jersey banks, regional banks that are very aggressive. Right now, you're probably looking at, in commercial loans, you usually get a term between 5, 7, and 10 years. Mm-hmm. So 10-year money right now is probably in the 4.25 range, somewhere in that. 7-year, very cheap money. 7-year money, you're looking in the 3.6, 3.7 range, and 5-year money, 3.5. So, and they're typically amortizing over 30 years. And most of the loans that you're getting are non-recourse. Non-recourse means that you're not personally guaranteeing the loan.
Sure, very familiar with that term in our world. Yeah.
Yep. So it's you're able to, a lot of these stabilized properties able to kind of finance these properties non-recourse. Now, if it's a heavy value add deal or property needs a lot of work and there's a lot of construction, then you're going to probably be looking at some sort of recourse, and that's kind of the buzzword we were talking about before, value add opportunities. And now, you might see cap rates on value add deals trade lower than a stabilized deal because there might be so much upside. Last year we sold a 500 unit apartment community that was 80% occupied. It was really mismanaged. And, if you look at a trailing 12, when I say trailing 12 income and expenses, that probably traded at like a 3.5 cap on in-place NOI. So, but they believe they'll be able to take that to about a 6.5 cap. They're investing about $12 million in that project. So, that's the type of opportunities where, I think there's a ton of investors that are always, that's the one thing I'm always hearing from investors. I want to add value. I want to create value in the property. And how do I do that? Well, I do it by a couple different ways. Maybe this property is mismanaged where I can lower my expenses, or maybe I could go in there and upgrade a kitchen, spend $10,000, $20,000 a unit in renovations, and be able to bump my rents by anywhere from $150 to $300, depending on where the property's at and where the market is. But that's kind of one of the best opportunities where I think investors are really looking for.
That's interesting. That's a lot of information for everybody to digest, and I can tell just by speaking with you, because you're in that world every day, that just rolls off your tongue. So people probably want to watch this video a few times to understand some of the terminology you used and what people look for, which is very important. So Ken, I greatly appreciate you coming out for day 2, and we'll have the big interview that goes out for Friday coming up. But everybody knows I'm Ian Walsh, or Ian at hardmoneybankers.com. Ken, how do we get in touch with you if we want to discuss more about cap rates and NOI?
Best way is just to send the company an email, info@rittenhouserealty.com, and we'll have someone reach out to you and get back to you very, very quickly.
Thanks, Ken.
Thank you.